Good afternoon and welcome to Biztech's Asian Midday Market Watch, brought to you by ShareInvestor Group, providing stock market data analytics, investor education, and online investor relations. Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank in Singapore, is our guest today. Vishnu, as always, great to have you every Monday.
Thanks for having me, Brian. It's my pleasure to be here.
Now, Vishnu, before we get your insights, we'll take a look at crypto markets and then we'll take a look at how regional stock markets have been performing. Bitcoin is at 19,803.2. It's down 0.96%. Ethereum is at 1,449.41. It's down 2.48%. Now, looking across to regional equity markets, the Straits Times Index is down 1%. Bursa Malaysia is down 0.01%. The Shanghai is down 0.24%. The ASX All Ordinaries is down 2.06%. The Nikkei is down 2.59%. The Hang Seng is down 0.66%. And rounding up the numbers, we've got the Kospi, which is down 2.1%. So Vishnu, it's a bloodbath out there. Tell us why.
Well, I think markets are reacting to and responding to a few factors, but one key one is Jackson Hole, where Fed Chair Jerome Powell came out sounding a lot more hawkish than markets had anticipated, which would suggest, and in fact, if you look at how US equities sold off all over 3% and NASDAQ collapsing 3.9%, one might say that markets have recovered a little bit of their nerves this morning. A prime takeaway there is, if we really had to sum it down, is the realization that the Fed is ready to have rates higher and for longer, and this usually doesn't bode well for equity markets.
And then, so as investors now, what are we looking at in terms of a rate hike down the track? Is that 75 basis points hike looking more and more reality?
I think that's really what Jerome Powell was suggesting. So he did say that he continued to use the term unusual in terms of the magnitude of 75 basis point hike. But he said, look, that may be par for the course. And I think what's really moving markets is the fact that maybe even after that, the Fed, may not be able to slow down its pace as quickly as anticipated earlier, and B, markets had gotten ahead of themselves in betting on the Fed starting to cut rates in 2023. And that doesn't seem to be coming through either. So now they have to contend with rates possibly heading higher in a faster way and stronger policy action. So it's almost like the Olympics, and that's the Olympics motto, isn't it? It's faster, stronger, higher, and that's what the Fed has delivered, at least from the Jackson Hole symposium. I think one aspect of it that's really worth thinking about, because it is there's been some new allusions. I'll just highlight three of it. One is that the Fed clearly said that tackling inflation is their unconditional responsibility. So they say now at this point they're not even fussing over the fact that it's a global phenomenon. Inflation is higher elsewhere, like for example Eurozone and UK, or for that matter that some of it is supply side, some of it is demand side. So the first message is unconditional responsibility, and they've gotten past all this, the details. So it's all rearranging the deck chairs from the Titanic. The second point is that inflation expectations really matter, and they matter particularly when inflation is higher. So inflation expectation seems to be asymmetric. When it's low enough, they've used the term rational inattention. So markets don't even pay attention to it. They don't put it into their business decisions, which is really what they want. Whereas now, the higher it is, the more likely that this is going to lead to higher inflation expectations entrenching and getting it even higher further out or persisting. And this is why I think markets woke up with the idea that, hang on, they may be forceful for longer. And their final point was, the more you delay on anchoring inflation expectations, the higher the economic cost. So they're willing to bear some downturn, but nevertheless, the main takeaway there is they're going to continue to do this quite rapidly. So it's going to be front-loaded still.
Now, Vishnu, in your commentary today, what other things are worrying you right now that potentially could move markets not in the near future?
I think, it's not just the Fed. I mean, the Fed remains a huge and dominant theme. But there are peripheral factors. I think closer to the region, we continue to stress on one of the trends that we suggested earlier, which is the Fed is hitting peak inflation sooner than Asia. So which means instead of Fed, I meant the US. So US inflation is going to start coming off. Asia may continue to trend a little higher. That accentuates capital outflow risks against a backdrop of an already elevated and precarious situation of higher US rates. So that's one aspect. There's also the China aspect, because we appear, some parts of the markets appear to be seduced by some of the drip feed of stimulus, but insofar that it may not be enough, there's still a small chance that China may face a hard landing with repercussions for the rest of the region as well. So these things continue to be, I think, factors that markets cannot lose sight of. And the one large takeaway from that is EM Asia doesn't appear to be on the best footing, even as the reopening story ought to buffer some of these global headwinds from higher rates. And I'll throw in one last caveat, which is I think the reopening story, the initial pickup will be there, but beyond that, I think EM Asia, and in fact the world as a whole, will be overly reliant on China's zero COVID policy that appears to be appears to still favor some more of a draconian approach, and so that also remains a holdback factor.
Now, Vishnu, final question for you. What are some key data points and events this week that we should look out for?
I think we've got a plethora of data points, from your ISM manufacturing to unemployment in the Eurozone, so on and so forth. But I'll just home in on really what markets are probably going to focus on. They're going to focus on the non-farm payroll, the jobs data out of the US at the end of the week. It's a very high bar for them to change their mind or to think that the Fed will be deterred. I mean, Jerome Powell has set the stage for that. We've got India's GDP coming up for the second quarter of the calendar year. That's going to be stellar. It's going to be double-digit. Markets are expecting something close to 16%. So I'm the pessimist here, expecting just less than that, 13.5%. But a lot of that is base effect, and it's really the forward-looking risks amidst the Fed's ongoing tightening, as well as fairly elevated oil price, and certainly problematic inflation and the RBI's tightening response that probably needs to be cleared up. So it's going to be a bumpy recovery path still. And we still have other data coming out. So in Korea's case, you've got CPI coming out. Vietnam has got a whole slew of data. Big takeaway, inflation continues to be problematic. And the Fed's policy action means that the pressure on EM Asia central banks is increasing. And depending on the response, it means that downside risks and capital outflow risks remain fairly high on the watch list.
Now, Vishnu, on that key takeaway, thank you very much for taking your time to be on the show.
Always my pleasure, Brian. Thank you for having me.
Now, we've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, on Biztech's Asian Midday Market Watch, brought to you by the ShareInvestor Group, providing stock market data analytics, investor education, and online investor relations. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks for tuning in.